4-1 declining to advancing stocks, 600 new lows on the NYSE. Not quite a recent record, but still pretty bad. Look at the sectors here. Usual suspects down: tech, industrials, consumer discretionary. Amazon's down 2% again today, 20% for the month. Banks are down 20% for the month, the KBE. Gold miners in a little bit of an uptrend since September. Gold's at a 5-month high. We've took several legs lower last week, and it was not on nothing. Remember, we had the oil plunge, we had the leg lower on the Powell press conference, and now we have political risk. This has been a lot to deal with the last few days. The Trump-Powell headlines over the weekend, the government shutdown, the withdrawal from Syria. The Mattis resignation may have been the most important thing of all in terms of market perception of the White House. And then we had that Navarro interview on Friday at the Nikkei, where he said it was difficult to get a comprehensive deal in 90 days with China. That didn't help things. On top of that, still, we are hoping for a year-end rally. I know it hasn't gone away. I've been talking about it for several days. There's hopes for pension rebalancing. How many reports have I read about how imbalances there are? There was another one out today with, I think it was UBS, I believe, $110 billion potential buybacks, that rebalancing. Then there's the buybacks. We had almost 80 buyback announcements in the last couple of weeks. They're still out there. Whether these two combined could actually make enough of a difference, it's not clear. Unfortunately, the pensions don't go out sending us press release, so it's difficult to monitor. We can theoretically say it happens, but it's difficult to monitor. Then there's the Santa Claus rally. A lot of these favorite things at the end of the year have not worked at all, including the tendency to rise in the last 2 weeks of the year. But Santa Claus is a very specific thing. Market tends to rise over the last 5 trading days, first 2 of the new year. The average gain is 1.3% since 1950. Not clear why this works. A lot of people believe that you have tax loss selling in the first half, and then people start buying stuff to replace the stuff that they're tax loss harvesting. That makes a little bit of sense. We'll keep an eye on that and see if that actually moves. The question for 2019, what's the right multiple and what's the right earnings number? So let's do this. Let's do an exercise. Let's assume no earnings growth in 2019. 0. We're expecting 8%, but let's do 0. 162 is the dollar value. What's the right multiple? 15 or 16 isn't right if you've got a flat earnings, so reduce it. Go to 14. Let's pick 14 and a half. You get those two numbers, you get 23.50. We're 30 points away from that, and that's sort of a round number that a lot of people are looking at as a potential. No earnings growth in 2019 and a much lower multiple, and you get 23.50. I think the important thing here is what happens with this meeting today here. Very interesting over the weekend. These discussions here. We've got the shutdown, we've got the Powell issue, and what Mr. Mnuchin might be doing here. Look at the S&P 500, by the way, and how far it's come in the last month. But a lot could come out of this meeting. This plunge protections team is one of the great legends of Wall Street. There's never been any evidence that the plunge protection team actually goes out and buys securities or buys S&P futures. They may have been involved in 2008 in encouraging the government, for example, to help out General Motors. To that extent, they definitely can affect the equity markets. But this idea that there's a plunge protection team out there that's somehow going to buy equities is one of the great myths, along with there's no gold in the gold vaults. We'll see. Maybe they'll propose something, though. This could go virtually anywhere. That's why I'm so interested in what he might have to say.